Let's welcome on board our chartists. We've got Nooresh Merani, Kunal Bothra joining in as always. Gentlemen, hi, morning. Kunal, today I don't want to talk about the Nifty. I want to talk about what was happening in the mid and the small cap index. That 3% fall in the mid cap index, 4% in the small caps. Are we in for further weakness in store?
Well, we should be in for more weakness, and because when we see the first round of correction, like what we saw in mid caps and small caps, it generally is not an aberration. It's a trend in the making. Now, what we need to understand is that what are the sectors and which are the kind of stocks which would probably go into a correction. So there was a list of stocks which had risen exceptionally high in the month of September so far, and most of the stocks in that phase of rally have actually seen correction of 10 to 15% on an average so far in the last couple of days. Some of them corrected by 10% or more. Even yesterday, and some of them were on a lower circuit, the mid cap names or the power stocks which we were discussing yesterday as well. So there's a decisive or a pronounced weakness which has come back into these kind of stocks. Now, every minor bounce would be actually taken as an opportunity to try and cut the leverage, cut the positions, reduce the risk. So I'm pretty certain that if there is any kind of a bounce, even on a day like today, we could probably see more profit booking as well as more cutting of positions rather than building of long positions, which may ideally not be the case at least over the next couple of days. So net, I'm expecting weakness to continue in the mid caps and small caps for at least another couple of days.
All right, Nooresh, let's get in your take then. And that move unnerving pretty much within the broader end of the market. Would you also suggest that it was inevitable given the furious rise upwards?
So if we look at purely from the price perspective, what has happened to the mid cap and the small cap index? So if you look at the Nifty small cap 100, it was closer to 11,800 on 25th August when Nifty hit 19,250. It went all the way to 13,000 levels. The BSE small cap was closer to 35,000 odd levels. It went to 38,700. So in the period of time when Nifty went up, say roughly 600 points and less than 5%, the mid cap and the small cap indices went up by 10-11%. So yesterday's move of almost 3 to 4% down still makes it a little more or in line with the Nifty move in the current rally. So it's just a correction of over exuberance which was there on the mid cap and small caps. But that is how corrections play out. So out here, the last swing low for both the indices are at least another 5-7% away from current market prices. And that would make it a 10% fall from the top, and it would still be a normal correction. So for now, that is the case. Say, first indications finally of a shakeout which could get into a correction towards whether it goes all the way to 10% or stops at 8% is a tough thing to call. But the fact is, we are still in line with the Nifty, and this was normal because we went up 10-12% when the Nifty did only 4-5%. So we are just normalizing. So this is a correction. So somebody who's looking to de-risk, somebody who's overexposed to small caps on rise can look to reduce, look at an asset allocation call.